Welcome to RANsquawk's morning briefing for Monday the 19th of October 2009. So, taking a check of the overnight news and also where we stand at the moment in the UK and European markets. We're off to a relatively positive start, reversing some of the equity losses that we're seeing on Friday's session in the US. At the moment, in terms of the FTSE, CAC and DAX, are currently trading up just over the 1% margin. A couple of individual stocks news just to get things underway. Bit of optimism in terms of the merger and acquisition front. National Express showing gains of over 8% this morning, although not a FTSE 100 company. Again, shares showing a significant lift, giving a bit of optimism as they have a Stagecoach, their main rival, in an approach for 1.7 billion sterling in an all-share transaction, giving their shares a lift. Elsewhere, Daimler in a German press release, or German press article, suggesting that the car maker will surpass 09 targets and cut costs by €4 billion by a double-digit percentage, and results are continuing to improve, and the company remains on track to achieve its financial targets. They're the second biggest gainer in Germany at the moment in the DAX. Elsewhere, ABB, they have a $1 billion Q3 net after changing provisions. They do see increased charges on their Russian business, but net a benefit for the stock there in Switzerland. And also Nestle leading the gains there after UBS upgraded the stock to buy versus neutral. So as mentioned, in general, reversing about half of the losses that were seen on Friday after those big banks reported. And we also saw that week in Michigan. Elsewhere as well, on UK banks, a lot of the weekend press obviously dominated by the fact that most are due to hand out pretty large bonuses in this earnings season. However, this morning we have seen the British government could undermine a recovery in the banking sector if it hits lenders with fresh taxes, according to Angela Knight, who's the chief of the British Bankers Association. Again, all those weekend articles suggesting that their banks may be getting some form of tax on their profits in order to crack down on those bonuses being handed out. Elsewhere, let's just take a look at some of the other overnight news. A few things to be aware of. Notably, in the UK markets, the pound has been under significant pressure across the board since the market opened. Cable currently trading down around 100 pips at the moment. In terms of news flow, which is weighing on sterling this morning, Adam Poston, one of the newest members of the MPC who joined at the beginning of last month, he said that in terms of the extension of QE, it will depend on the outcome of the quarterly inflation report, which is currently being put together at the moment to be released in November. But he did suggest that the process of QE would probably need to go further. So again, heightening speculation that not pausing, they could indeed extend in the next meeting, which is to be held next month. Elsewhere, Ernst & Young in a pretty bearish report and assessment of the UK economy, suggesting that there will be a VW-shaped recovery in which the economy struggles to grow next year, bumping along the bottom. In particular as well, on the sterling front, they say that the pound will be stuck at near parity against the euro for up to 4 years. So again, that has weighed on sterling across the board. Just taking a look in other news from Asia overnight, did see the Bank of Japan board minutes from their monetary policy meeting. They said a few board members said the effects of the central bank's corporate funding support was waning, suggesting that they may favour letting the measures expire at the end of December. And elsewhere, pretty upbeat out of China, which is helping give things as well a bit of a sentiment lift this morning. China's GDP grew more than 7% in the first 9 months, according to a senior official, saying that there will be no difficulty in reaching the government's targets in terms of 8% growth. In other news, China will be able to sustain the momentum of its V-shaped recovery, according to their National Bureau of Statistics. So taking a look in terms as well for the US market, something that which may get a bit more attention when they enter the market in a few hours' time. The Barron's cover article saying that they make their case for the Fed to increase short-term interest rates to a more normal 2% all risk, fostering another financial bubble. Pretty bullish in this article. They say that there's no need for short-term rates to remain near zero now that the economy is recovering. And they also say that the Fed also ought to consider scaling back its massive bond purchases. Again, something worth noting out of Barron's for later today. In terms of the calendar though, economic releases is extremely quiet. The early main economic release will be from the US NAHB Housing Market Index. That's due at 6 o'clock London, so midday in Chicago. Speaker-wise, we'll be looking out or keeping a close eye on any commentary in regards to the euro and currencies as the Eurogroup finance ministers meet at 4 o'clock London time today. Obviously, given some of the recent strength that we've seen with the overall bout of dollar weakness, And elsewhere, Fed Bernanke is also due at 4 o'clock London, so 10 in Chicago. Elsewhere, fixed income, we'll be looking out for the Bank of England. They're conducting a reverse auction March 2022 to set 2034 maturities today. And elsewhere, Apple, they're due to report after market alongside Boston Scientific and Texas Instruments, so very much a tech in the earnings space today.